All right, good evening, guys. Sorry about that. Had camera wasn't working. I had to reboot. So this is a good book we were talking about this weekend at the live research weekend workshop, which was an amazing experience. I'm going to show some of the highlights of that here in a minute. This one, The 5 Elements of Effective Thinking, co-authored by Michael Starberg. I think he's University of Texas A&M. I learned everything I needed to know about statistics from his great course on making sense of data on statistics about 20 years ago. It was amazing. I've got every course that he teaches on, great courses and great investment. And there's a chance to get his book there for $1.50 on the 5 elements of effective thinking. Awesome book. So I wanted to just show a quick overview of the research weekend course. Let's see here. Yeah, so these were the briefings that were given this weekend. I put about 20 different pieces of research and briefings inside there, things that were lessons learned that came out of the hybrid trading and the trading through COVID. Glenn Worth and Ken Hum operate as a collaboration and accountability team, and their briefings are beautiful. Glenn's on how to exit a bad trade, and Worth's discussion of his pathway to automating his various trading systems. He approached that as a mechanical engineer, electrical engineer. His company makes electric motors, and it was not surprising to see that he used the same engineer's sensibility in automating his trading practice module by module. Was really instructive as he proceeded from AMI broker through Excel into Python. Ken Hum's briefing was brilliant, documenting his practice over the last 18 months. Bill Scheidt demonstrated a crypto PSAR flip swing system that was just absolutely superb. And it looks like a robust all-season, all-market approach to swing trading, not just cryptos, but others. Sonal was brilliant and brave in examining psychological elements of trading, expanding on the work she's done with hunting and farming, which was such a powerful briefing 2 or 3 years ago that's it's influenced, had a strong influence on Luke's work later on. Eric Morrison talked us through where they are with the weekly Forex trading process, the 3 systems they have, and how they are collaborating together to make that work. They're doing a lot of automation there as well. Griff and Phil have been working as interns, documenting the lessons learned from the foundations course and the Q&A sessions, and their note sheets are absolutely magnificent. And I think persuaded Phil to take on the challenge of supervising other interns in the documentation of our materials and lessons learned. Tom Hardison's briefing on The Alchemy of Teams, a personal journey towards understanding how you build collaborative teams with emotional intelligence, blending both art and science. It's been seasoned in entrepreneurial thinking as well as large organizations. Had a number of people just independently tell me that one was worth the price of admission, especially those of us that are still operating in the business world as well as doing trading for ourselves. So there were a lot of practical lessons on leadership and management, being a good team player there. Jeff Boccaccio from our factory, who is now on the board at the Society of Technical Analysis, of technical analysts, I should say, in London. He gave us a peek behind the curtain into the way he is approaching the supported spring crossing research. He's taken a look at the way the 4 seasons of MACD affect performance of SSC on the intraday. Lisa Majors briefed a sideways volatile market system that really surprised her once she developed the system in spite of her beliefs. Those are often the most surprising and powerful systems. That was a pretty good briefing. Luke's work was just off the chart goodness. I mean, it was jaw-droppingly good. Matt Richardson brought us home with an update on the way he's trading options on a swing system based on a market classification system that's connected to volatility. This was part of a inquiry that he had started in 2014 when he took our first course as a corporate lawyer. And he took all our courses, came out to the research weekend and live trading weeks here in Kansas, has now formed his own money management firm, has gone into partnership with Gary Antonacci, and his trading practice and managing other people's money is so successful, he's going to step down from his corporate lawyer gig and just do that full time. And he updated us on the system he first showed us in 2019. It's pretty slick and has a wider utility than just trading options. It actually helps you with like market classification, and it's strongly connected to the insights of the blended monthly rebalancing system as well. I provided some updates on protreptic coaching, and Jim Carroll, another pro money manager who's been a 20-year member of our community, updated his system on VIX and volatility. That has been pretty powerful. All of the high definition briefings are now processed and uploaded in our course. Well, they'll be there forever. And what we're going to start doing is building out the previous year's research weekend briefings and videos, and start building out the archives previous year. So signing up for that course, the Tortoise Research Group is a course on our Rizuku learning management system, will get you access to all of that in perpetuity, because we're trying to bring more of the research to the surface for people who have, sort of paid the entry price and done the due diligence and suffer through our work. I feel like it's important that we expand the circle of competence and support the good collaborations that are going on. That's good for all of us. So we're going to use this course in Rizuku, the Tortoise Research Group, as a way to continue to add to this. To that end, we made a decision this weekend that the Saturday night podcasts will be just for the folks in this Tortoise Research Group to provide updates and exchange ideas semi-formally in between the either annual or semi-annual large presentation weekends. There's good reason to do both. It doesn't have to, we're not going to do it either or, but we're going to do and both. So I just wanted to give you that update. Being honest, any one of those briefings was worth the price of admission, as the folks that attended would tell you. And you've seen some of the sample slide decks, and as good as they were, listening to the presentations and then the 30 to 40 minutes of discussions afterwards, phenomenal, absolutely phenomenal. So I wanted to just give you the update on that. Now, the nice thing was that after the 8 hours of video recording and discussions yesterday, had about an hour break, and then we just rolled right into the Sunday night briefing. And Luke had already taken my coaching advice to heart, and is going to be expanding his work out of CLF to now include IWM. So he posted his chart frame on that one. And we looked at the futures that Rick was going to rock, and you'll see already he's applying the lessons learned from that workshop into the expanding his trading practice now to not just be CLF, which is kind of a specialty steel maker, but into a broader index that trades with the futures and is very robust and presents a slightly different style of market and trading. And we wanted to see if the skill set that he's developed over the last 18 months with Cliff will work on IWM. I know they will, and you're going to start seeing evidence of that. Les Seabright asked, is that workshop, that research group, suitable for beginners? I'm going to tell you yes, because 18 months ago, Luke was a beginner, and you can see the work, the way he set up his work and the way he approached that craft knowledge is an inspiration, and you should see that video. And Griff Cooper and Phil Wu 10 weeks ago were beginners, and they just started as interns and documenting the insights and lessons learned one video at a time in the foundations course, and they have jump-started their trading expertise. In 2014, Matt Richardson was a beginner, and this documents his journey to being a full-time professional money manager, as well as being a corporate lawyer and a PhD. And Bill Scheidt 10 years ago was a beginner, and you ought to see the work that he's done on that crypto PSAR flip system. That shows you what right looks like. And like any good dojo, it's open to you at the skill level that you're at. And so we had 3 or 4 guys who are just starting their journeys, and I think they would tell you that that it was well worth it, particularly with the ability to go back and revisit the lessons and to have access to the, for example, the foundations note sheets that that Phil and Griff did. In fact, there's a excuse me. There's an intern's job waiting to be done to view each of those videos and apply a Cornell note sheet to each of those, because you would find that that gives you the same kind of insights and locks in the learning the same way that Griff and Phil did on their journeys. Listening to them describe how that affected their learning journal or their learning style was pretty profound. So yeah, short answer, is it suitable for beginners? Yep. All right, so let's get the, here was an example of, yeah, this was just beautiful. This was from Luke's briefing, where he has settled on a really good idea, which is to take his trades 100 trades at a time, subjecting them to analysis, writing the chapter of that analysis and putting that in the journal, and then moving on in sets of 100. And you can see that on this particular set, he's got 100 trades, 58 winners, 29 losers, for about a 2-to-1 win rate. Yeah, exactly, 2-to-1, 58% to 29 cents, 13% scratches, and the payoff is almost 2-to-1. Excuse me, it's 1.8 to 1, but that's like taking a 6-sided die and rolling it on a 1, 2, 3, or 4. You win $1, and on a 5 or 6, you lose 55 cents. How many times a day do you want to play that one? Answer: all of them. So this is a good analysis on the scatter plot, the rolling R average, the cumulative R picture, and what that 100 trade histogram looks like. When you build that out over his 1,167 trades, you can see his equity curve. That's what you want. You can see his scatter plot. There's exactly one trade out of 1,167 that lost more than 1R. So that is a very well-controlled mechanical trading process. And the win rate is 54 to 42 over the life cycle of the system. So a slightly improved coin flip, 54 to 42, that's 5 to 4. And the payoff is better than 2 to 1. So again, how many times do you want to trade that one? All the time, every day. Because the sample size is large, the SQN is 11. The normalized SQN comes in at 3.21 with, and that's pretty solid. So that his presentation was pretty extraordinary. He did it in kind of a low-key manner. That's typical of his quiet, humble style. This was a graphic we built on the spot to help describe Lisa's sideways volatile swing strategy. And the idea was that sometimes you get a sideways quiet market and a sideways normal market with increased volatility, but sideways volatile, you get these big swings. And what she was simply doing, without going into all her rules, was tracking the price, in this case represented as the RL10, and when it reversed and crossed the baby dragon, she would get short and then have exit rules that would allow her to capture profits. And she would do that until it got to the other extreme, reversed, crossed over the baby dragon as the signal to go long. And whether it waited to get to an extreme to make the flip or whether it started sooner, she was basically trading from crossover to crossover in both directions, with strictly controlled risk. And that was a pretty extraordinary system that she briefed. And the way she connected that with some options too, was as an optional rule, was pretty impressive. So altogether, quite a remarkable weekend. I'm glad we were able to get that done, thanks to the power of Zoom, and then Rizuku to capture all of our lessons learned. So that's going to be an ongoing project. All right, let's look at the market today. There we go. All right, so we're showing some signs of stability here. Failure to fail further. It looks like it held support down here at the Z-2. And this little region here almost feels like Lisa's crossing of the baby dragon, if we can say it that way. So we're just about ready to cross the baby dragon. It has already moved beyond that. That's a pretty good sign. The 3-period hull is still pointing strong to the upside. We're getting close to price testing the downward sloping RL30 extension. And you can see the PSAR is continuing to drop down. We're getting close. We're within a step of the Bollinger Band mean, which is, in the middle of that dragon. Slope of the dragon is down. The Bollinger Band mean is pretty much sideways. So this could be, if we get some more chop in here, this could very easily become, like a sideways, it could be, a sideways quiet channel kind of developing here. It's not quiet by any means, but if it settles down, this could end up being something like a sideways channel beginning to form. So we'll keep our eye on that. To me, there's some serious resistance it still has to get through. It's got to get through the Bollinger Band mean and clear the dragon, get through the PSAR, and then it'll come up and test the top of the dragon up in here around 469, and the top of the RL10 at around 470, and then the big PSAR dots up here, which connect back here to 470.3, and then the swing high up around 474. So there's some road signs and checkpoints along the way that this that if it continues to follow the hull to the upside, that's a measured rebound. But again, there does seem to be some evidence of support being established around Z2. So cautiously optimistic. Let's look at the sectors. S&P was up strong today, 1.18. Best performing sectors, the Dow 1.9 and IWM at 2%, over 2.5 at one point. The weaker sectors, or indexes, I should say, the Qs in emerging markets were only up 0.8 and 0.78. Treasuries gave back 1.37, still above the key price level of 150. So we'll keep that in mind. It's, you notice treasuries are still in the daily summer. All right, let's look at the sectors that underperformed today. So we have consumer discretionary, moonshots, 1%, wheat and precious, tech and clean energy, down to 0.85. Agriculture, biotech, Mexico, lithium, between 0.3 and minus 0.3. Blockchain, the ETF, -1. Little cluster here of Ethereum and the large cap blended crypto. VIX gave back almost 8%. Bitcoin and the Bitcoin futures down over 8%. So still some trouble in River City for the cryptos. It's just normal volatility for them. Underperforming targets, Coinbase and Squarespace and the disruptor and Tesla also off of 0.6. Still above the key psychological price level of 1,000, but it's given back a significant chunk. U.S. Steel, PayPal, and TX, the steel company, were in the green but underperformed. All right, and finally, Microsoft was up full percent. All right, let's look at what outperformed to the upside now. So we have lumber, Devon Energy, well, actually lumber at 1.27. We have Mexico Materials, Energy, Arc Genomics up to 1.5. Arc Innovation 1.5, Finance 1.5, blended commodities, staples, the other lumber at 1.85. Simon Property Group is our proxy for commercial real estate, 2.3. The FANGs really did well today, 2.3. Oil exploration, 3%. Oil itself, 5.25, after what had been a big sell-off last week. Outperforming targets, Alcoa 3.4, Apple 2.15, Virgin Galactic 1.8, Robinhood, and Devon Energy. So So, energy materials, pretty good. Tech lagged a little bit. So there's actually more room for them to make gains tomorrow. And then in the tech space, Microsoft, Apple. All right, let's look at what the boys did today. Okay. All right, here's a nice one from Susan. And she's working on Ethereum on the 15 minutes. She saw essentially the morning hook. And this is like a 1, 2, 3 kind of an entry. And she's playing risk essentially down to, it's hard to see where that is. Just below the RL10. So I like that. That's a reasonable support box. The 15 minutes is a little easier to see, and the price move stayed above the VWAP the whole time. And she's got another baby. Oh, that's like a modified dragon. Yeah, Susan, take a look at your dragon. We normally do that 0.5 instead of 0.05, and that'll give it the same width as you would see on ours. What you're showing there is essentially just a thick 10-period simple moving average. When you're only using, 1/20th of a standard deviation. That's why your dragon is so narrow. So if you make that 0.5 instead of 0.05, that'll give you the same dragon that you see on ours. And then I would suggest taking a look at getting another monitor, like a portable monitor for your laptop screen, so you can get more real estate onto the screen itself, because you've got a lot of admin stuff taking up screen space, and so everything feels kind of compressed. Hard to get a good read on that. I mean, it's manageable, but you might find it easier with a more vertical space. Like I think you can minimize that portion of the of your bar up there. Give you some more space. But that's a good looking trade. Managing your stop all the way through. She locked in her gains here, moved, and once it got through this part of the dragon and above the Bollinger Band mean, she moves to the support with the higher low, and then she takes a really good exit to near the end of the day. It wasn't continuing, so she went ahead and just cashed 1.5 the nice way. I think that's a good idea with as volatile as the as volatile as the cryptos have been. I think you'd be happy not having any overnight risk on that one. Right. Who's got Myrna? All right. Couple things just to note here. Hey, this is good work. Using Luke's best practices and just numbering those trades. Daily summary 1.8, pretty good stuff. So there was a gap down to here, and then a sharp sell off, a recovery back to the VWAP, which couldn't hold, and then this crossing right here, that's where I want us to be taking that short position. This is like that's an RLXD to the downside. And if you look at this as a high, a low, a lower high, that makes this like a supported, that's probably a fall crossing or a supported winter crossing. But this 1, 2, 3, this rapid crossing of the dragon to the downside when it was preceded by a big down move, what you're looking for is a high, a measured low, a lower high, and then your collapsing dragon occurs here because it takes out this previous bar. So this one actually represents like a pocket entry. Try to clean that up a little bit. It's a sloppy line, right? So when you bring this line across, that makes this the collapsing dragon. Okay. CD. And this becomes that that supported fall crossing or winter crossing, depending on the color of MACD, although it's still showing spring. But this crossing right here, that's a front run of that CD. We call that little space inside here, that's the pocket. And then the official entry, if you're waiting for the actual collapsing dragon, would be right here. And then you can see that's going to give you a wonderful trade. And if you're just using the PSAR dot, you end up getting out here, which leads you into your SSC, which is excellent. Here's the harsh winter that you need to see in order to justify the SSC. And so now the RL10 crosses the baby dragon. You notice the RL30's rolling over, the dragon's rolling over here. This is darn near an owl right here, because you have the dragon rolled up, the RL30 is sloping up, the PSAR is already flipped. The SSC is probably like right here. Waiting for the owl is fine. This is good exit management. You only had 1, 2, 3 bars of open risk. Then you locked in your gain, started marching it up. You got what was available for 1.2. Now, when this rolls over, I want you to notice, now that you're into this, and there's some emotions and all that stuff going on. Now, what I want you to notice is that just by looking at the top of the dragon, at the turning points of the dragon, there's a high, there's a low, there's a lower high. So now you have that kind of 1, 2, 3 pattern. We add to this the idea that it's stalling at the VWAP, like it did not break out north of the VWAP, which would be a positive sign. It came to the VWAP and then rejected. So now when you get that PSAR flip, that's a very nice exit or entry, excuse me. Now, what I actually think, yeah, you could get that right at the PSAR dot, but still that's really good. I like that you got what was available for 0.7. Nothing wrong with that. Now on this one, notice that the rebound not only does it not get to the VWAP, it doesn't even get through the PSAR and then rolls over and crosses right here. Now notice where the RL10 crosses. That's your next CD. So the answer to your question, yes. And now you get this move, and then you'd probably have gotten out right about in here. So that would have been a plus. Now this is a reasonable effort on the long side because this kind of stalled. It failed to fail further. I like that. There's nothing wrong with it, taking that shot. Now this is a pretty tight stop. The stop I want you to have is the bottom of the RL10. Let me clean this up so you can see that a little easier. The bottom of the RL10 might have kept you in this whole time. but I don't mind that exit. So you essentially re-enter. This should not be a -1R. Your stop needs to be down here at the bottom of the RL10, not the bottom of the dragon. That is way too tight. Whereas, these moves over here, I want you at the bottom of the RL10 and the PSAR. That's a good reentry. I think you were, after losing 1R here, I think you were sensitive to getting paid. You might have re-entered right here when it didn't fail further and continued, but you certainly need to take this one, because now you have a low, a higher low, and that makes this a kata 2. And that would have gotten you paid. Okay, good work there, though. Let's see, we had seen that one. Just saw this one. Let's look at Alcoa. All right, this is another case of the stops are too tight. You're still in early days of learning this. This is a good entry. I like the kind of the Bollinger Band mean stop right here. That's reasonable. 1, 2, 3 exit. Good job. I like this one rolling over and going again. I like the exit. That's fine. Waiting for the new low of the day rather than the break below the dragon. That's fine. Now the PSAR dot is okay. Good exit. This is late getting in, because now you have a low, you have a higher low. We could be here instead of here. I don't mind that. I think after this big fail, and then it rebounds and starts to fail again, I might be getting out in here when it crosses the Bollinger Band mean, or at the PSAR dot. That's fine. This is maybe a beat late, and then that's the short, because again, you have a high, a low, a lower high in the dragon, and the trend of the day is down, which you can tell by the Bollinger Band mean and the slope of the RL 270. You have the Z3 lines are pinching and it's voting to the downside. So I think you can get short here. Still, that's not bad. I don't mind this. I don't mind the win. When this doesn't even get to the PSAR and then crosses back over, I'd like to see you get short here. I don't mind that exit, but you got to get that one again, because each time these highs are lower and lower and lower, and they're not violating the PSAR. And so what I want to say is you're gripping it too tight. Use the PSAR. That PSAR kept you in the whole trade. This space in here, I mean, it's not even getting through the Bollinger Band mean. This is all noise as part of a normal downward move. Trust the PSAR flip. Use the PSAR as your execution risk. And remember, your execution risk is going to be equal to 0.2 of a position sizing risk. So you have really tightly controlled your risk, and that allows you to tolerate the normal noise of a normal channel. That's just how wide the normal noise channel is as this thing is moving downward. And then instead of getting chopped, you're making bank. All right, let's see, Luke on Cliff. Standard practice for him here. He notices the gap up. He lets it breathe. Sees the RL10 rollover, buys the breakout, uses a nice wide stop, gets paid for one, re-enters. Yep. Could have scratched here, lets it get all the way to the PSAR. Don't lose money. Now this exit, if you had exited for a scratch here and then you saw it break the PSAR, you'd have been prepared mentally to get short there rather than here. And then this would have been a winning trade. And then this one, once again, don't lose money on the trade. It's only 0.4, but so we can live with that. Good patience, letting the Z3 pinch. And now he sees that it's Z3 pinching and we're north of the VWAP. That's a good shot. You gave it a chance. I'd like to see you get here rather than here. That's a good shot. You got paid. Fractional loss. You just staying with it, following the rules, crushing it for 1.4, and a grinding day for 3. Nice. Oh yeah. So he had this one, but he also had the reversal to the downside too, to bring home 3. Nice day at work. Good day at the office. Now we're going to see how that rule set that he's developed in Cliff applies to IWM. Now we noticed last night during the trade frame that the futures were up and there was a good chance for this thing to pop right from the opening. He was prepared for that. One of the instructive parts of that research weekend workshop was listening to the coaching I gave him after his beautiful presentation. And we talked about how to add a second target now that he's specialized for 1,200 trades on Cliff. What can we do about that? The short story on that was I wanted him to move into either the Russell or the Aussie US dollar pair in the Forex, so that he would have something that would trade round the clock with lots of volume and lots of volatility. It has a different kind of volatility than CLF, which he's going to notice in here, that when it's in the doldrums, this thing tends to grind a lot more. And that early morning move and the late move is worthwhile. It's still okay to take these as long as you're taking micro losses. Maybe the first 2, after you get a couple micro scratches, maybe you take a break until you see this clear move developing with the higher lows in the Kata 2. But that's going to be you learning the feel of the index as opposed to trading that small mid cap of Cliff. Okay, so nice move. Possible second was here. That's a good exit. This is worth a shot. These are all reasonable. I'd like to see you get that scratch. Like if this comes down and doesn't punch through the VWAP and leave the Z3, but starts to reverse, you got to be ruthless about cutting that right there, especially after a first nice leg up. It comes to the VWAP and finds support, then that makes this an entry, which will then get paid. And then instead of minus 0.3 and minus 0.3, you get a scratch and a plus 0.3. So that's the difference between minus 0.6 and plus 0.03, right? This is a reasonable effort at trying to front run, because you had a high, a lower high. That's a good shot. And that's a good scratch. That's a good reentry. Now you got paid for 0.3 and then a good reentry. Nice tight discipline. This is the place maybe. When it comes up, comes down and tests the dragon and then starts to resume, bang. That's what a sign looks like in the Russell. Notice how tightly constrained this quiet grinding channel thing on the upside is. That's finding the RL270 is your guide on this one. Until until everything crosses back over, and then that run is done. So that looks pretty good. And picks up a nice little piece. So those moves look and feel a little different than Cliff. It's much more smooth, regular river current, slower flowing river. Nice work. Bullish volatile. We're back to overbought now on the 2-day. So this almost feels like doesn't it feel like a little Kata 2? Yeah. Still red bullish. Risk Z is still giving us the warning. It's still vulnerable to sharp moves. Still favoring the day trade rather than the swing. Weakness in the metals. Alcoa, Nucor. Look at the winners. Procter, Johnson & Johnson, United Health, and then Cisco and Intel from tech. So 2 chunks of winners. Just a handful of dojis. Plenty of auto framers. Couple dojis, tons of auto framers in the ETFs. Defensive plays suffered today. Gold, silver, treasuries. Energy started making a comeback. Energy and oil exploration was up 3%. Lots of auto framers to choose from. I think I really like Microsoft just because I always look for it. And Luke, there's the Russell at 2.6 to 1. So there's more where that's coming from. And because it was the big winner today, and that's the first day of a run, that could be like the second day of a swing trade in your swing trading 1 day at a time approach. So I like that one a lot. Winter still dominating, but there's a handful that have already turned the corner. There's Intel and Cisco for those of you stocking individual tech companies. Procter, Cisco, and I'll expand that to Intel. Could this be the Christmas turnaround for Walmart? I don't know. Might be. Consumer staples benefiting right now. Evidence of holding support right here. And it's at the bottom of the that range of normal, right by the 0 line. That would be a natural place for it to find support compared to the 200-day moving average. The last time it was there, it held support and made this nice run, which became that improvement in the slope stat, right? So we want to be mindful of that. And that's the move. The last time that it held at the bottom of the river, it then gave us that move in 2 legs up. There was leg 1, leg 2, chop, sell off, but now it's holding. So that would lead us to believe that has potential, which could get it right back up to the previous, high at 474, in this case, even 480. All right, that's everything we got going. Let's get this published and posted. And I would We're making available the to those of you in the sound of my voice, the access to the research group for half off starting 1 January. That's going to be $2,000 and it'll never be cheaper. It's available for $1,000 right now until the new year. That's a good deal. There were 13 presentations. The consensus from the guys that were there was that each one was worth the price of admission. So I'm just telling you what they said. I tend to believe what makes that thing so attractive to me is that you see guys that are just early in their career working on acquiring the lessons learned and locking them in with Phil and Griff. You see people contributing specific systems with specific ideas. And it's not just the systems, it's how they think about the system as a hypothesis. Masterful job of identifying beliefs, then operationalizing the beliefs, establishing the research question, gathering data and testing it, using accountability groups to double check and verify and gain other insights. And then you see seasoned money managers like Matt and Jim and Bob were in the room that understand a little bit about how to do this for a living over the long term. And some of their comments were extraordinary. And then you see guys that are robustly into the accountability group and working together to defeat the forces of loneliness and trader isolation, like Ken Worth and Glenn Osborne. So it was a very eclectic mix that shows so many different angles. And Van Miller made a really good point. He said, hey, I'm just starting out on this stuff and I'm doing BMR and dabbling in swing trading, but I was able to understand everything people were saying because we have a common language and an orientation, which makes this a very efficient and effective way to learn from your trading tribe. So in my view, that's what makes it worth it. Yeah. Yeah. And yeah, Luke, I think makes this point. Was that from Luke? Yeah. So Luke is at the position now where he acknowledges he's in the production mode, and it 1,200 trades to just, it takes 1,200 trades so that you can learn what your minimum manageable risk box was. And the insight that Luke gave me this weekend was the phrase, we want to make the minimum manageable risk box small enough so that monkey cannot get in there and mess with us while we're trying to drive the car. When you have a wider risk box, there's a lot more things that can happen over a longer period of time. And that's when the self-doubt and all that stuff comes in. So one of the advantages of that tighter manageable risk box is that the trade either works or fails sooner. So there's less room for discretion and self-doubt and wondering, changing your mind. And that's what keeps the monkey quiet. And then the other thing Luke would observe is that after 1,200 trades, you've seen enough repetitions with skin in the game that you're a little desensitized to some of the noise spikes, and you're more able to see the things that matter. It's less about the price bars and more about the slope and shape of the RL 10 and 30. And you can start paying less and less attention to those price bars. So there it is. All right. Take good care, guys. We'll get this published and posted and see you tomorrow.